Good morning, everybody. How you doing today? Oh, man, these things are not working at all. What the heck? You gave me a dud. Oh, my God. Anyways, what's going on, everybody? So Tim behind the camera, he made sure to give me the gun that didn't work. So what can you do? Oh, there we go. How are you all doing today, guys? It is Friday morning. We're having a little fun here at Verified Investing Studios. And listen, when it comes down to it, we're going to get into the charts. There's a lot to discuss, although I will say a little bit of a quieter morning today. So without further delay, Tim, let's get going. All right. So first and foremost, markets are upticking just a little bit. And again, what we're looking at here is the overnight action was down a little bit. And you can see that's just gentle float. The first thing I want to make clear is that this week has been probably the lightest volume week in years for the stock market. Now, considering the stock market's been rallying, that's pretty remarkable because in general, you'd assume, oh, wow, there's a lot of buyers pushing up the market. But it's actually the opposite. Yes, there are buyers, but there's just no sellers, and meaning institutions are not buying. It's retail. And again, at the same point, institutions are more than happy to let the retail crowd float the market up. So again, S&P 500 slowly inching up. We're up slightly on the day. Not a big move, just ever so slight. But if we flip over to the daily chart, we're still just below my next key level. Now, the first thing I'm paying attention to is this candle from yesterday. Now, it's not a topping tail, so that's the first thing, is that topping tails, you have to have a big candle. So there has to be a large candle with a large wick to it. And the wick is the kind of like the tail at the top. And this one, yes, it has a wick to it and a closed in the lower percentages here, but it's not big enough. It's not a big enough candle to really get my attention just yet. So what am I looking for? Well, you have to still think that the S&P could creep higher and touch that level. Now, you might be saying, well, where does that level come from? Let's flip to the weekly chart and zoom out. If we zoom out on the weekly chart, we can see that from the 2007 highs just before the Great Recession, right? That was that Great Recession. We've then come back all the way up, tagged it in 2022, and then we are just literally $1 or $2 on the SPY away. That's basically $10 to $20 away on the S&P 500. So that to me is the next level. And as a technician, it's important to know that I have no clue if that level is going to be a level that finally stops the market. My job is just to find the levels and then watch them. I look to see how the market performs on that level. Does it get rejected? Do we get a big pullback? Do we kind of just go right through it? How does the market react? And that tells me a lot about the relative strength or weakness in the stock market. All right, so again, that's right around 533 on the SPY. And again, we can keep an eye on that. Going to the chart of the 10-year yield, this one again, we talked about how when it was trading up around 4.7%, it was the high end of the channel. It should come down. Remember the bear flag we talked about? So if we look at the bear flag formation, which was right here, it was going to break down. We got the breakdown. Now what we're seeing is yields are creeping back up just a tiny bit. Now, what's the likely scenario? Well, if yields creep up here, the chances are is we're going to go back to that line, but now this line becomes resistance. It's basically a return to the scene of the crime, and you'd expect a rejection off of that. All right, so again, in general, don't be surprised if we float back up maybe to about 4.5% on the 10-year, but at some point, it's likely we'll see the next leg down in yields. And probably, honestly, they're headed back to about 4%. Now, the big question on how low yields will go, there's two things. Number one, how weak does the economy get in the U.S.? And number two, does inflation start to come in? Because if inflation stays high, then yields have to stay relatively high. Because if you bring yields down too much and flood the economy with money, inflation goes from high to even higher. So there's really this correlation we have to watch for between inflation and yields. The lower inflation comes, the more the Federal Reserve can lower rates later on, and that will bring down interest rates, okay? Now, looking at the U.S. dollar chart real quick, we can see that the dollar, again, has kind of rolled over a little bit. We have bounced just like yields for the last couple days, but the answer here, or at least what I'm expecting, is we have this trend line that goes back to, when does this go back? Let's see. Wow, it goes really quite a bit back. It goes all the way back to 2022. So if we look at this, this gives us some insights on what to expect. Where could the dollar find major support? We take that high pivot, we drop it down to these two pivot highs, we drop it down to this one, and we get a trend line. Now remember, we did break out on the US dollar, but now you have to do the same thing. You assume it's going to come back to the scene of the crime right there, which is around 103 on the DXY. Now, if it goes lower, that's okay, because you have the secondary trend line right through here, right? We have all these levels right through here that are going to act as additional support at around 101.75. Now, the one thing I will say is if this lower line gets taken out, then the dollar is in trouble. But as long as it's coming into this level and then below that it has additional support at that level, at some point you would assume another push to the upside there. If it breaks, watch out below. That's basically what you would expect. Okay. Let's go on here. Let's take a look at the NASDAQ 100. The NASDAQ 100 did pierce a key level yesterday, but by the end of the day, it came back in. What we can do here on the chart is take the high from 2021. This was that former all-time high, right? So if we look at that level right there, we go all the way over to the 2022 highs. Yesterday, we pierced the level, but by the end of the day, we had sold off back below the level. So this is a level, just like we were talking about with the S&P, where the S&P, we haven't hit it yet, but I said I would watch it very closely if it hits it. How does it react? What does it do? Does it push through? Does it pull back? What's the price action? Now, what the difference is here is that the QQQ, the NASDAQ 100, has hit and pierced this level, but closed below. That gives me a little bit of a window into the price action. I still have to watch how it behaves today as well as next week, especially going into NVIDIA's earnings. But again, this is something now that we're very closely honing into on the NASDAQ 100. All right, in terms of stocks and earnings, we had Take-Two Interactive and Applied Materials. Those were the two stocks that had earnings yesterday after the bell. Initially here, if we look at this, you had a little bit of a dump on Applied Materials, but honestly, we've come all the way back up, basically now green on Applied Materials. So initially it was some selling action, but it has come back here and is now slightly green. Now again, a chart that is slightly green, slightly red, it doesn't get me excited for day trading opportunities because, again, there's just not enough volatility. I want a big move down or a big move up where it gets really emotional, and then I can start to look for levels where it should reverse up or down. Next up, if we take a look at Take-Two Interactive, I think this one as well was TT was there. I think that's, let me type that in. There we go. Take-Two Interactive was much the same, right? What we saw here was a big drop initially on earnings, but then price has recovered and we're basically flat again. So today is a day where, interestingly enough, at least for the big names that reported earnings, there's not a whole lot of price action. And again, I would just draw your attention to next week. There will be a few earnings. One of my favorites personally is Zoom, which reports Monday after the close. Who the heck knows what it does, but what I do know is that it's trading at the lower end of the range with $7 billion in cash. Again, it's about a $19 billion company, so that's a hefty amount of cash. And it is trading at a forward PE of only about 12. So it seems cheap to me. Doesn't mean they're going to have a good earnings report, but it's certainly on the interesting side. And by the way, I just want to show that chart. Let's go to the Zoom chart real quick and kind of highlight this. But if we go to the weekly chart, look at where Zoom was back in 2020 and 2021. I mean, we were talking about a $300, $400, $500 stock. Look at where it's come down. It's got this little tight range here, and I'll zoom in on this so that we can really see what is going on. But if we zoom in on this little channel here, you can see that, again, it's kind of been just chopping sideways in this lower range. For me on Zoom, I'm watching for a break above 68. You get above 68, you get a breakout of the chart. And you can see, again, you have the lows here, and you have the highs, which are all connected on a down-sloping trend line right here, right here, right here, and here. So very clearly, if we come up here, we want to see that breakout to the upside and get this thing going. Not a lot of stocks near their lows, in all fairness. There's very, very few. And honestly, what we're seeing is this is pretty wild stuff, but so many of these meme stocks are now collapsing. Like GameStop is down huge today. but new ones are running, and it is honestly remarkable to see some of the price action in these stocks. Speaking of GameStop, guys, this is just a reminder. I have nothing against anyone that wants to play the meme stocks. Just remember, the party does stop. The music stops, and you don't want to be left holding the bag. And what I mean by that is we're basically trading below $22 on GameStop right now. And if we just go back to, I think, early this week, right? Just literally a few days ago, this was trading up to $80. So $80 in a few days, it's back to basically $22. Now, I do have a couple levels I'm watching, 1850 to 1750. There might be a bounce level there, but again, just a bounce, as I ultimately think this thing is eventually going back down. Same thing with AMC, same thing with most of these. Again, this is what back in the olden days when there was penny stocks out there, people used to do these pump and dumps. By the way, a lot of what Jordan Belfort did back in Wolf of Wall Street was this kind of thing. He just didn't have the internet to do it. He had to have people on the phones doing it. So it's technology changing, and interestingly enough, social media has made it so that pump and dumps can be done over social media and reach millions more people much easier, and that's why you get some of these insane moves. Again, look at some of the moves in some of these stocks. FFIV, one of them that's just been absolutely insane here. And if I bring that up, it's trading at $2.78. Again, this was a 5-cent stock a couple days ago. What is that, like 5,000% move? Now, again, is this eventually going to collapse? Probably. In fact, not just probably, I mean, high probability, yes. But again, it just shows you that the momentum on Reddit can pump these things to insane levels, like remarkable levels. Okay, so again, guys, I mean, this is some pretty crazy stuff going on here. There's new ones every day being pushed on there, and honestly, as long as you're not last out, you want to be in basically the first 50% out probably. I guess there's money to be made in some of these. Now, this one, again, is getting a little long in the tooth, but we'll see where it ends today. All right, couple other stocks here on my radar as we scroll through. I do think that it's worth it. I'm just kind of seeing if there's anything else here. I think that's all for now with those stocks. So what we're going to do now is we're going to do our drawing as we always do, guys. So if we bring up our YouTube scanner and our Twitter scanner of comments of people who shared yesterday's stream. Remember, that's the criteria, plus be a follower of Verified Investing. You can be entered in to win our daily prize, which again, basically the lowest price prize is at least $300. So it's a no-brainer. All you have to do is share the stream on one of your social medias and then let us know where it is. All right. Buzz Nightmare 1313. I love that, by the way. Buzz Lightyear, take off on that, I'm assuming. Buzz Nightmare 1313. Congratulations, 1 free year of NordVPN. Thank you, NordVPN, for giving us that. Now, as long as we got time here, guys, let's go right over here and let's spin the magic wheel of appreciation. And let's see what we get, what will be won on Monday. All right, what's it going to be? What's it going to be? What's it going to be? Oh, Token Metrics, guys. Amazing. Token Metrics, a 1-year subscription to Token Metrics. That's worth thousands of dollars. Holy cow. That's a great one, guys. And again, if you're into crypto, this is one place you have to be a member of, to be honest. The insights in their AI models and everything that I've seen, they've gone through it with me and I've kind of understood it. It is pretty damn cool. So again, there's a link below if you want to check out Token Metrics. But again, Token Metrics, thank you guys for being a sponsor here of the Wheel of Appreciation. All right, over here we go. Let's move right on over, and we're going to take a look at Bitcoin. Okay, so the first and foremost thing is we know we had the inverse head and shoulder that broke out, right? So we had that breakout, which puts it in a short-term bullish bias that at least travels up to the high end of this range, maybe even the target of 74,000. And obviously we'll have to get through this level here as well as 74 to see if we can break through. But either way, notice what's happening. So you got the breakout, you got a small down candle yesterday, a small green candle today. That could be the start of bullish consolidation above this level. I'm still in the camp that as long as you stay above the neckline, which is this line here, of the inverse head and shoulders. Let's say we go like that. What type of pattern is that? Bullish flag pattern, right? And so ultimately, that gives us the probability that at some point we test the $68,000 to $69,000 level on Bitcoin. Now, just going to a couple other charts here in the crypto sphere. Solana pushing up beautifully, guys. I do have a resistance level that I'm eyeing on Solana. It's just above 170, and then a secondary level here as well. I just want to show you guys this one. This one's a pretty good one as well. So again, as these things move up, for me, I'm not chasing Solana up here, right? I mean, it's just not my style. I don't like to chase. I want to be on the first, when the level hits, whether it's support, I buy, whether it's resistance, I short. And for me, the best level here, and again, there might be some levels just below, like in this range, but this level up here, notice there's a parallel line here, 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 all the way down to these levels. And if you take this high, it goes right through these lows, and that's a parallel line. So this line here is parallel to this line, and that gives us this line here, which is right around, just honestly, it's around 195 to 200. So there's a possibility we could get up to those levels. Now let's look at some of these other beaten downs. I haven't done Cardano in a little while, so let's touch base on Cardano and see what Cardano's doing here. All right, so the first thing that I see is it is upticking. So you are starting to see some of these altcoins uptick. Now, by the way, if the meme stocks are running, altcoins like this should be running too, because it's all about risk on. It's all about like trying to make lots of money. And I mean, that's what it is, right? And we've seen Pepe do well recently as well. So first and foremost, we have a very defined level of support, right? I mean, that you can't get any better than that. So as long as price stays above this general line here, right, then technically you give it an upside bias. If it breaks that level, which is around 41 to 42 cents, obviously, then I think it goes to 35 cents. But on the upside, we have this pivot here. That's going to be first resistance just above 50 cents. If it can get through that, then you maybe have a little bit more upside to about 55 cents. But there's just a lot of resistance right in here, right? So again, just be aware. Yes, Cardano's trying to make up and make a move, but it's got to get through a lot of these levels to really have a run at those previous high pivot points, okay? Next up, let's take a look at gold. And gold, again, had a small pullback yesterday, but is catching its mojo today and pushing up. It's looking more and more like, in the very least, it wants to test this high, this double top high, which is the high of the topping tail. Any close on the daily chart above that high, it's this thing, honestly, gold's going straight north of 2,500, in my opinion. This is that big of a level, right? When you negate a topping tail, it's usually not like, oh, I negated it by a fraction. It's usually like, okay, this is the next big leg to the upside. So again, shorter term, I was kind of honestly looking for a pullback to 2,200. We only got to about 2,280, but ultimately mid and long term, you guys know I'm a huge gold fan here, a huge metal fan. Anything that's physical, right? Because remember, the US dollar does not trade against nothing. It trades against other currencies. And so the US dollar is holding it's generally, if you look at the last couple years, the last 5 years, the dollar's held its value. But that's because every other country's printing their currency just like the dollar is, or the Fed is. So what that tells us is that hard assets that are scarce, gold, platinum, palladium, silver, etc., those should just continue to go up as long as the other all these other currencies are being printed. So just a reminder on that. I think that's an important reminder. I think a lot of people assume, oh, if the dollar stays strong, gold's not going to go up. No, because they're all gold. The dollar stays strong because they're printing yen, they're printing euro, they're printing all of those as well, and it's based off of those other currencies. Gold is not, and so gold should still go up in that situation. All right, looking at silver, guys. Holy cow, this is big on silver. Can it close above $30 today? This is a huge, huge technical level. Now, it hasn't done it yet, but again, you can't deny that we have now a hit with 3 hits, and here's a 4th, and we're above $30. Watch this closely. We close above and confirm on Monday. Honestly, I think silver goes almost straight to $35, then $37.50, and eventually $50 an ounce. A lot of potential upside if it can confirm above this level. Couple other things just to briefly go over here, guys. Looking at the crude oil chart, it's just holding on to technical support still, but please understand, you should all by now, if you followed my streams for a period of time here, we should all know what this pattern is, right? I mean, it's about as clear as day. Now, again, does that guarantee a down move? No, it doesn't guarantee it, but it certainly pushes the probabilities of it heavily in the favor, right? Probably 75% chance that oil is going to break down in the not too distant future. Lastly, natural gas real quick, guys. On nat gas here, it continues to stay strong, so impressive. Yesterday was a good move. We did pull back off of that level. I kind of took off all my lines because I wanted to do a Fibonacci with you guys. Let's do a Fibonacci retrace. We take the high over here, we drop it down to the recent lows, and you can see there's two levels that we're watching here. So number one, this first line is the 50% retrace. Yesterday we pierced it and pulled back and closed below. Today we're above it, but let's see, do we get rejected and come back below it? If we close above it, it likely signals a move up to the 618 Fibonacci, which is right up here at around $2.85. Interestingly enough, that level's kind of right around here as well, which would be a secondary pivot point. But ultimately, I want to see, natural gas is very volatile. I've seen it go up and down significantly intraday, and I want to watch to see where it closes today. Does it hold the 50, or does it close above the 50% retrace? If it closes above again, then I think probabilities favor at least a move up to about 285, which honestly is only 15 more cents on it. It's not that big of a deal. For me, I shorted a little bit down here, right down here. I added a little yesterday, and I'll add again at the 618, just slowly accumulating, just like I did when we were going long on nat gas, slowly accumulating, as they call it the widowmaker for a reason. It tends to have monster moves in each direction. All right, guys, so listen, it has been quite the week. In fact, I am borderline exhausted from this week, but I am here every morning at 9 a.m. Monday through Friday to make sure that you guys get your information and your updates and your technical analysis, and hopefully a lot of education. I think education is the most important thing that I give you guys. So thank you so much for a wonderful week. Thank you so much for tuning in, and I'm proud that we can do the Wheel of Appreciation for you guys so that you guys can at least get some payback for spending your time here with us every morning for about 20 to 25 minutes. On that note, go have a good weekend.